Thank you so much. Now, we've got a full panel coming up, and I know they've been hanging around for a little while, so appreciate their patience with us. So next up, we have Bradley Allgood, CEO and the co-founder of Fluent Finance, joining me on stage, and he's going to be welcoming his panel to address expanding revenue opportunities for digital wallets and payment providers. So Bradley, if you're mic'd up, please come on stage and join us. Big round of applause, ladies and gentlemen.
Well, today we're going to be talking about expanding revenue opportunities in Web3. There's two primary forms of revenue within Web3. You see a lot of decentralized focused revenue, which is protocol owned, sometimes inflated with volatile and liquid or illiquid assets. And then there's regulated revenue, and that's what we're going to really dig in today. So I'll welcome up our panelists here today. Bradley Allgood, by the way, CEO of Fluent Finance, and I largely focus on bank-issued stablecoins and regulated activity in crypto. Yeah, go ahead. If you guys want to introduce yourself and talk a little bit about some revenue opportunities that you're focused on in Web3.
Hey guys, I'm Eowyn Chen from Trust Wallet. I really appreciate you guys being so hardcore and still hanging out in this conference room. Well, we do have some great food and drinks outside. So just a little bit about myself. I also recently just moved to Dubai, and before Trust Wallet, I used to lead Binance global central marketing team and help to see users at Binance growth from tens of millions to hundreds of millions. So my goal is also to help the decentralized space, as Trust Wallet being the biggest mobile wallet right now globally, and how we can open up the entrance and accessibilities for the decentralized space. I will save the revenue opportunity afterwards because I think other speakers would like to introduce themselves first.
Okay, nice to meet you. I'm Lennix. I'm kind of an OG in OKX. We built OKX since scratch from 6 years. I'm currently positioned as global CCO of OKX. I cover multiple areas in the group. Previously heavily focused on institutional business, but this year my team focused a lot more on the licensing business in OKX.
Hello, so my name is Jeff, and before joining crypto space, I was traditional finance and worked at JP Morgan and Bridgewater. So in 2021, the crypto god just summoned me, and right now I co-founded this company called Darwinbit. We are now specializing in providing wealth management solutions to exchanges as well as investment platforms, and it's very excited to be here today.
Awesome. So I'd like to dive into a little bit about some of the Web3 transformation that you guys see happening in the space and how that can be applied to revenue, both on the public layer and back into the regulated activities. And love to start with your opinion first and see, running one of the largest non-custodial wallets, how you see that adapting.
I do see that revenue opportunity in the Web3 has been challenging. During the bull market, I think just like traditional space that all the companies are focusing on growth. Specifically for us, because we have been early on acquired by Binance. So at that time, our mantra was to not worry about revenue, but focus on user growth because we hold the gateway to decentralized space. So we don't need to worry about revenue for a long time. And of course, when bear market hits, I think this is a good cool down period of time for us to just thinking about after 6 years of building this cool projects, how do we turn into actually become a mature business? Then revenue and self-sustainability becomes very important for us. So we do have a couple of explorations, but I think the most easy, low-hanging fruit has been around fees. But the fee for our consideration is how can we have the opportunities for fees without hurting significantly the user experiences? Because if it hurts the user experiences, that defeats our purpose of what we are trying to build to begin with. So we have been more focusing on the side about how to strike a good win-win positions with our B2B partners the kind of the channels that we plug into, no matter that's from the payment gateways or from the potential swaps or other kind of staking or DeFi services, when they have a good revenue channels opportunity, we consider ourselves to be the traffic platforms that helps those channels to be able to have accessibilities to users. So we consider ourselves more taking a traditional, let's say, the traffic revenue approach, rather than a more of a taking the cut from the volume side, which we don't see ourselves playing in this space at the moment. So that's our current take when it comes down to revenue opportunities.
Yeah, good question. We spend a lot of costs and investment on the Web3 wallet as well. I think this is a question that's been asked every single day. I think the intention of building that particular wallet, Web3 wallet, the original intention is provide the easy access. Then we come up with the integrations of all kind of layer 1 chain, layer 2 chain, and provide the seamless experience of Web3 experience. So if that particular components of the product is providing an easy gateway access, instead of maybe part of the reason, instead of charging, making revenue based on fees, I would perceive probably we provide additional value as a gateway. The gateway represents something. For example, right now there's a concept in Web3 like the intent-centric transaction, right? Okay, you want to trade, if you're going to swap your USDC based on Ethereum, you can have a result. But how we navigate different components within that particular intention, we can charge fees based on that. And also, I think Web3 wallets, Web3 components will eventually be integrated part of a centralized function. So in that particular area, in some area, probably serve as a broker-dealer function and that provide gateway service. So if the Web3 component is meant to provide gateway functions, the next step to provide value proposition, proper advisory service based on gateway.
Awesome. And you on the fully regulated side, I'd love to hear your perspectives.
Sure. So I'm more on the asset management side, not that crypto native, I would say. So when we talk about revenue generation, I would like to think like how we can, basically where we put our value trap. And there are three things that I think, like in the foreseeable future, that's definitely gonna happen for crypto. One is Bitcoin as digital gold, and Ethereum or other utility coins as utility generation stuff, and also like stable coins as global, like a replacement for global M1, transaction stuff like that. So if you look at those three pillars and you calculate their CAGR, which is compounded annualized growth rate, you can see a 60 or 70% like astonishing number for the next 7 years. And we think as people gradually move their assets into a Web3 world, either for like wealth accumulation or for like utility generation, there's going to be huge asset management solution like built around it, not only for the capital, not only for the speculation capital side, but also for the wealth management side. And that's why we moved into the space of crypto, not to be that crypto native, but to empower other crypto native projects as well as like participants to manage their wealth better.
That's awesome. And I want to dive just a little bit more into transforming, and I'd love to hear your opinions on this. With all the wealth management products that are now coming on chain with real world asset integrations, how do you foresee that transformation supporting different organizations like OKX as an exchange or Trust Wallet into finding new revenue lines for their clients?
Okay, I will go start first. Okay, so I think for exchanges or for other, like investment platform, for the past 3 years, the mass adoption only happened when people see a sharp rise on falls. So people become very speculative on like trading like activities or on-chain activities, and that's not sustainable. As we like grow into a space where Bitcoin got mass adoption, I think people are gonna get used to a low volatility space, and the trading volume like itself or like staking the staking revenue itself won't be big enough to sustain a like great exchange anymore. So we do need a alternative revenue flow that's suitable for the current market stance. And I think when we look at the traditional finance toolbox, which has been developed for like 40 years, I think structured product has been mature for like 30 years, is the right taste for it. It can basically help you generate yield in all kinds of market scenarios, not only sharp falls and sharp rises, but also stagnant market and also like slow bull or slow like bearish market.
Yeah, to add on that, I think Web3 provides a much easier access to product, a yield interest-bearing product like structured products compared with private banking. Because in traditional world, you probably need to having a private banking account in order to access those kind of exotic product. The good thing about the market right now is probably trading in range is particular favor to structured products. And another good thing is that's a lot more education to guideline and even a little bit gamifications of helping investor understand the structure of the payoff diagram of the structured products. Right now, the only problem right now is right now most of the underlyings on structured products or even yield-bearing products based on major token, Bitcoin and Ethereum. And I'm hoping we can see one day that we can basket option and structured product in futures.
Awesome.
So when you mentioned about transformation, as a wallet, we are usually the way to a utility that what the users in the society cares about, rather than we being the end destination that people want to be. So I would say for our growth or our revenue opportunity is very much symbiotic to what the space has figured out to explore. Unfortunately, during this time, I think both Jeff and Lennix has talked a lot about on the financial side, such as how we can learn from the traditional market and figuring out. I'm more interested in what are the non-financial side that the space has to figure. And honestly, there hasn't been anything that's figured out very well. So we're still in a very much earlier stage product market fit exploration side. And when I mentioned about product market fit, that also includes the revenue opportunity. Because if we provide a new product, a new way of engagement, and then the users or whoever the partners are not willing to pay, then it means the value that you created doesn't have an economic value coming out of it. Then this is not a business startup. This is more of just a project. And I think a lot of the crypto earlier startups still remain in this way. Of course, the good side about bear market is it forces people to have to be a little bit more cool-headed and mature about thinking about, does this route actually have something to go that leads to a good product market fit? So I'm more here to learn and be more open-minded and to see what the space and the other project has to be explored. And then we can say, how do we facilitate you to be successful as a result, and we can be successful together for me to grow. That's our mindset in how we approach about the future transformation that the space has to come and what we can write on it.
And that's a good point. And with the bear market, we've all been faced with many challenges due to previous colleagues having bankruptcies and illegal activities and many different things happening in the space where billions of dollars of money have kind of disappeared. Has forced startups to be leaner, focus on revenue generation, and forced exchanges and large wallets to evaluate different types of revenue. What are some challenges you guys are facing now in either building or maintaining existing regulated activities, on off ramps, products with cards, various different things of that nature?
All right. Yes, obviously lots of challenge. So I think this industry, we have been building this thing from day one. We face a lot of challenge, different kind of challenge and different phases. But I think the recent challenge mostly relies on upcoming regulatory scrutinies, but also internally, we need to figure out probably a next growth curve, generating sustainable business model under the heavy regulated environment. What kind of new product we're gonna limit our product and service in large extent. We want to build a scheduled products in AML, transaction monitoring, trade surveillance, market surveillance, self-dealing program in global scale. That's cost. But at the same time, we think about let's also open a new opportunities for us to raise the bar with traditional finance that we can talk within the same language with us. So, but probably we need to build new product, new service, tailor-made for traditional finance. So that is the upcoming opportunities and as well as challenge for probably not just OKX, but in crypto exchange as a whole.
Okay, so I think for us, we are basically running a B2B business model. So the regulation, I think the heavy lifting is mostly on the exchange side and also like for the 2C, yeah, for the 2C side. It's very, many thanks to Lennix and his team. So we basically only deal with regulator on a B2B model, and that's much easier to do. I think the challenge for us, not necessarily from the regulation, but also from the people that's experienced the whole FTX scandal, is how you mitigate the counterparty risk, right? So essentially, we are a wealth management solution provider. We are managing your wealth. Then how can I trust you with my wealth? And that's a question we need to ask. And we have been pioneering the solution of not touching the client's money. We basically leave it as it is, and to manage all the clients' money within the platform. Say you subscribe the product on OKX, then we just manage the product within the OKX platform. That just basically eliminates a huge proportion of the counterparty risk. And I think that's what the market is concerned about right now.
Yeah, and I think counterparty risk is a really good point, and particularly with you guys being a leading non-custodial wallet, you guys enable people to put the counterparty risk on themselves, right? They manage their own keys. How do you foresee?
To your point, yeah, to your point, I think, so we fortunately doesn't face the same regulatory pressure or like the exchanges, because I think wallet is a misnomer. Like, we're not a fintech product. We're a Google business. We're the browser to blockchain. So we don't have the backend. We don't settle people's money. And then we're just, the easy browser for people to access what they already own on the blockchain. For us, the challenges comes in uncertainty. The uncertainty side about how the users, the partners, and the regulators, whether they know about the role that we play. And then also for us to be disciplined with ourselves, that we don't get ourselves into the non-browser part of the businesses. It's very tempting to go upstream and go downstream, and sometimes can get very much vertically integrated into, let's say, a more in-depth DeFi business, which will potentially, and I think will likely, and reasonably likely, to get the regulated aspects to come in the future. We just put, one of the way of running startup as a business strategy is to decide what not to do. That's why we decided that this is not our business to do, so then we don't get over there. But the uncertainty related to what do people know about DeFi? What do people know about blockchain? What do people know about the role that a wallet/browser plays in this whole ecosystem? Gave us so much uncertainty that sometimes makes it difficult to even make business decisions. And I think this is a difficult part to both product growth as well as revenue growth. Because any of those decisions can potentially impact, are you treading it down into a regulated business or potentially non-regulated business? For a lot of the founders over here, and I would say that some of the decisions you make earlier on may come back to you. So it is kind of wise to get educated in thinking about what type of business do you actually want to run. Earlier on, and so that you can make principled decision later on, and not making the wrong decisions that you actually don't want to get yourselves into.
And so now I'd like to get into kind of the more interesting side of things. I want to go over what you guys believe a killer product in the space is. If you were to say over the next 2 to 3 years or even 5 years in the future, what are the products that need to be brought to market or that you guys individually are bringing to market that you believe are going to make the greatest impact in the space? Love to start with you.
Yeah, we're doing browser. We just need things to be simpler. That's what we're known for. Like people know us as a simple wallet, and we think that's one of the core for good user experiences rather than adding so many different features all together that doesn't do a good job for people to come into the space. So how can we still show people power about the blockchain and keep it simple? That's what we have been focused on building when it comes into, we have a recent round of UI and a UX and a lot of revamp for our product, and that's what we're going to focus on. And we think this is the role for us to play to the blockchain space. And any kind of a killer product that I would expect and I hope to see is any of the entrepreneurs in the space to take advantage of the ongoing changes with privacy focus, security focus, and utility focus product that can help to make this space more confident and more trustworthy for the normal people to come into play. We just need to get rid of the scammy, Ponzi kind of a nature of the product going forward for us to be of a good value to play in the society. And that's what I hope to support any of the projects if you're good with this kind of utility. And we would love to bridge our users to you so that we can grow together.
Yeah, I think we probably focus on the, if you want to serve as a gateway for Web3. So I think we probably have to really focus on optimize to a level that's similar with Web2 experience, like creating an email address. So we'll keep optimizing MPC plus account abstractions at the gateway to entry the wallet. But because of that, right, because you hold that particular process, when they start integrating or engage with different kind of smart contract, we can add the security element on it. We can add whether or not we can check whether there's a scam or fake smart contract they're doing it before you even authorize the trade. Because of that particular reason, we can add social recovery. That's still in theory, but we want to do it. In a mega context is because whenever you're starting to authorize a trade, if you put smart contract in front of all kind of authorization, it's essentially you represent an intention that you want to deal with multiple chain. So on back end, we still need to integrate. Right now it's 70, probably 100, 170 in future at the back end infrastructure. But the core technology always about order routing system, smart order routing system as the lowest gas fee as possible. And also algorithm at the front end, whether or not you have fast enough and have latency sensitive enough to pick the right path for the particular transaction for your user. And all should be executed under decentralized manner. I think that's where the technology is going.
Awesome.
Sure. Just to sum it up, I think it would be something related to RWA. If you look at the history of crypto, I think the most successful RWA company, Tether, has helped to build this space from $1 billion business to $1 trillion business. And with currently the US yield standing at something at 5 and going to be resilient for the next 2 or 3 years, people are going to buy something have 5% risk-free rates like on-chain. So anyone who can bring that risk-free, compliant, mass adoption facing thing on-chain, it would be just rebuilding the Tether, but on a tenfold level on that.
And I think that's a good point. You know, a lot of what we're trying to do is bring mass adoption, bring institutions in, and bring a level of trust, less scamminess in the space. And I'd love to hear a little bit more about your thoughts, how you guys are working with institutions, how you're taking your custody solution and turning it to an enterprise level. And then obviously, would love to hear the rest of the panelists particularly as well, how you're applying your products to institutions and building revenue lines on those.
To be honest, we haven't worked with institutions so far. Our bread and butter is focused on retail, and we serve retail very well. We're also a very small team. We're less than 100 people from end to end, including customer support. So with the limited resources, and it's very important to focus on what not to do. And also one of the reasons is that we haven't got a lot of good inbound requests from the institutions to see where we can leverage our technologies to serve them better. So before I have a lot more confidence, then this is the route worthy to be going, then I'd rather stick to what we're doing the best. And there are a lot of players around in the industry, and everyone have their own strengths. So I personally don't believe that one entity is too big to take all the cakes, and it cannot be, especially when we're in the decentralized Web3 space. So that's an honest answer, is that no, we don't work with institutions at the moment. But if I could be better educated into see how we can potentially facilitate institutions later on for me to build confidence, I'm open to it.
Awesome.
Yeah, specifically about, for institutional business, specifically about wallet and custody area, I think it's always a hybrid of technologies and compliance at the same time. So institutions need to understand the portion of technology, of self-custody technologies, and the safe, proof of reserve, auditing, cryptographic auditing. That's fine line, that's bottom line of the technologies. But also they need the last mile barrier to be tackled by certain compliance standard. The compliance guideline and standard need to understand the technological aspect. Hey, for example, probably you don't need regular audit if you have certain cryptographic audit trail. These two worlds need to merge in order to execute a Web3 custodian wallet business. In no case right now on the path, I mean the industry is on the path is trying to narrow this gap between completely self-custody wallets or legacy State Street-like custodian, let's say, right now.
Yeah, I think we are a little bit in the front run of that game, because the structured product that we are bringing to the crypto world is very mature in traditional finance space, and we are just customizing it to the crypto need. And we are not, I would say we are not reinventing the wheel, but we are reselling the wheel like in crypto space. So the institutional investors is very familiar with.
He was actually there listening to my speech, and after that they got him this crazy idea of hacking into us.
We're nearing towards the end of our time, but I definitely wanted to take a little bit of time to go around and talk a little bit about some products you guys are bringing to market, some impacts you guys are looking to make in the market. I think at this panel we have all the way from the institutional side, bringing in new financial products and access to crypto and Web3, and bringing in retail adoption and understanding and ease of use. So I'd love to hear kind of a little bit about your guys' roadmaps, and we have a little bit of time for you guys each to talk, and love to hear more what's coming to market from you guys.
Yeah, so for us, as I mentioned, our mission is to make our experiences good enough for blockchain, and then we need to continue to reinvent ourselves based on the technology. So we're going to have a full round of UI UX update. So we wanted to bring the new state-of-the-art UX experiences to the market. So I think a lot of it will roll out towards the end of the year. And it can be a technological solution like Lennix mentioned about MPC AA, but we're also carefully evaluating because no technology is a perfect solution for all. So we wanted to have our take about what's the best UX going forward. And besides that, we're also very much interested in to continue to broaden the fiat payment gateway solutions by working with partners. Because I think there are so much needs around the world. The problem is accessibility. It's not necessarily the most sexy to do, but it's a lot of hard work. Just needs to get it done. And we wanted to build that rail of that infrastructure, just like we do with multi-chain. We wanted to do that with all the payment and all the other infrastructure level solutions. Take advantage of the bear time to lay the infrastructure in the right place, and then when the bull market comes, we can be ready to serve with scale and with diversifying needs around the world.
That's awesome. Yeah, Trust Wallet, Visa Direct integration.
Yeah, for us, okay, you have a lot of roadmap. We have multiple departments, multiple roadmap. But in OKX as a whole, I think always the top priority is to finish most of the licensing regime within 1.5 years. This one path. The other path would be we want to merge the CX experience with decentralized experience within regulated fashion, within the SAM apps, within similar apps. So this is technological challengings and also compliance challenging as well.
Our mission is definitely to pioneering the evolution of digital asset. So I would say just simple word, simpler product, better product, and for more clients, and that's it.
Awesome. Well, it was great having you guys up on stage, and I look forward to hearing more from your guys' new revenues to market and seeing how everything progresses.
Thank you.
Thank you, Lennix, Talal, Eowyn, Jeff, and Bradley. Thank you guys for staying with us. As they depart the stage, it's now time for me to introduce our next guest at the WOW Summit 2023. Tigran Bolshoi is co-founder at the Kinetics Network. Please put your hands together and welcome to the stage.